soil-sampled carbon credits debut in U.S. market. The U.S. agricultural carbon market is entering a more data-driven phase. Veterans Carbon Holdings, VCH, has announced the issuance of what it describes as the first third-party validated soil sample-based carbon credits to a U.S. farmer. Verified under B-Carbon's Soil Carbon Protocol V2.0, the credits are based on stratified soil sampling and independent validation rather than satellite imagery or practice-based projections. For a market that has faced ongoing criticism over transparency and methodological consistency, the development signals a potential shift toward direct measurement, traceability, and tighter verification standards. From modeled practices to measured outcomes, most agricultural carbon programs have relied on models that estimate soil carbon gains based on documented changes, such as adopting no-till or planting cover crops. While these systems offer scalability and lower upfront costs, questions around accuracy, permanence, and additionality have limited broader institutional participation. VCH's methodology replaces modeled assumptions with stratified soil sampling at depth, validated by third parties under B-Carbon's scientific framework. According to the company, direct measurement is capturing higher concentrations of stored carbon in agricultural subsoils than are typically reflected in imagery-based or practice-based systems. By quantifying carbon stocks directly, the approach aims to address credibility concerns that have constrained demand in some segments of the voluntary market. The initial credits originate from farmland in Minnesota's Red River Valley. Serialization is being conducted through Doveview's blockchain infrastructure on Hedera, providing a digital chain of custody from issuance through sale. The infrastructure is designed to support auditability and data transparency for corporate and institutional buyers seeking higher integrity environmental assets. Revenue implications and market positioning. Beyond methodology, the financial structure is central to VCH's strategy. The company projects approximately $1.1 billion in payments to U.S. farmers and landowners over 9 years, with 55% of revenue allocated directly to participating producers. Leadership has positioned the model as a reallocation of carbon market value back to rural landowners, framing soil carbon as an asset generated at the farm level. The first grower to receive issued soil sample carbon credits, Stuart Eag of Greenbush, Minnesota, characterized the program as generating income tied to measurable field data rather than projected estimates. In a commodity environment defined by price volatility, verified environmental credits could offer an additional revenue stream, assuming pricing and buyer demand remain stable. Quality differentiation is increasingly influencing carbon credit pricing. Institutional buyers are placing greater emphasis on measurable outcomes, standardized verification protocols, and transparent tracking systems. Soil carbon credits supported by physical sampling may command price premiums if they demonstrate durability, manage leakage risk, and sustain long-term monitoring. Scalability remains a key variable. Plans to expand across 1.5 to 2 million acres in North Dakota and western Minnesota by 2026 will test whether intensive soil sampling and validation can be executed efficiently at commercial scale.